Ladies and gentlemen, welcome to Destination Retirement with Robert Kuhn.
Time to get on board with Robert Kuhn from Kuhn Capital Partners. Retirement is a destination you've spent decades saving for, and what you do with those savings can make all the difference in the life you live once you get there. Income planning, wealth planning, tax planning. Destination Retirement with Robert Kuhn starts right now.
Welcome. You're listening to Destination Retirement. My name is Robert Kuhn. I'm the president and the founder of Kuhn Capital Partners. We're independent. We're a registered investment advisory firm, SEC registered investment advisory firm. If this is your first time listening to us, welcome. You're going to find our show will be completely different than everything you're going to listen to on this radio station over the weekend, and we pride ourselves on that. And that's one of the reasons that we see the results that we do. And we are very, very happy about that. We're going to sing it from the rooftops. We're on a mission to help individuals not invest in sales pitches, not invest in strategies that sound too good to be true, because generally they are too good to be true. And at the end of the day, our job is to make sure that even with this market, that we can still craft a portfolio that can deliver positive returns in negative markets. When you look at our pillars are really protected growth, opportunistic growth, and then tax reduction. And we're going to talk about more of those throughout the week, but those are throughout the show rather, but those are our pillars. So if you've listened for a period of time and now is the time that you feel comfortable reaching out, you can do that. 630-492-1912, 630-492-1912. Sure feels like summer. Definitely on this first weekend of October, but it's been great. I'm a golfer. I love to golf, member at Stonebridge, and it's been really nice getting out here when I didn't expect that we'd be playing into October, and it feeling like it is summer, actually. So if you're a golfer and you want to golf, you've never played Stonebridge, and you have an interest in what we're saying, let's get out and play. Simply give us a call, 630-492-1912. Markets are incredibly high. Markets are incredibly extended. But you know what? That does not mean that they're not going to continue to go up. And as I talk about with individuals when we have the luxury, the honor, the opportunity to meet potential new clients, we tell them, what you think, what I think of the markets is totally irrelevant. Gut feels don't really matter. The markets are going to do what the markets are going to do. What we are seeing more and more of, since we've really started talking more about tax reduction in our energy strategy, we're seeing more and more people come in that have larger IRAs, anywhere in that $1 to kind of $20 million net worth range. And certainly, higher net worths as well. But, we pride ourselves on being the firm that will work with any investor as long as they have a willingness to learn. That does not mean that our investments are not incredibly sophisticated, because one of our drawbacks of our firm is really the level of sophistication that we're bringing to the table. It was never more evident in kind of some meetings this week, where, we're meeting and I could see people's eyes kind of, glazing over. And, I kind of take a step back and really, sit and think, am I doing a service to these investors? And I am doing a service to the investor, because if I know what's on the radio, I know what's on the station, I listen to the other shows, I know the annuity pitches that you're going to hear, it's like, these other shows that are on the radio, it's like they're a hammer and everything, looks like a nail, and the nail is the annuity. And, but they're too afraid to say it. And it's just crazy to me. And we are really coming on strong when it comes to this lifetime income, strategy, because There's a much, much, much better way. And the banknotes, as you know, are incredibly popular. We're at about 50 million in issued banknotes this year. That's a lot. I mean, that I don't know where that ranks us in Chicago, but for it's probably towards the top. Probably not number one if you kind of have an institutional shop, but if you have a financial advisory firm that is focusing on kind of the individual investor, kind of that, $500,000 to, $20-25 million investor. That's a lot. We may lead the market. We'll probably end up, somewhere in the neighborhood of 70 million by year's end. And next year, our goal is, 100 million. And so we'll see if we're able to achieve that. And if we are, then we're doing our job, because I listen to so many sales pitches. And, if you're not in this industry, it's hard for you to pick up on this stuff. And it's just like your business. Your business is going to be different. You're going to have much, much more knowledge than I have. Doesn't mean I'm not smart. It doesn't mean that you're not smart. When it comes to our business, it just means we're in different fields, right? And you don't know what you don't know. And we have always prided ourselves on helping the individual investor, educate them to make a good decision. If that's with us, great. If it's not, so be it. You're going to walk out of those meetings with us much more educated than when you walked in. And so we're seeing larger accounts, larger investor pools that are thinking and talking more about the Roth conversion strategy. The Roth conversion strategy, most people who are making, $500,000, $1 million, $2 million a year, or have, maybe an IRA that's, 1 to 10 million, they don't think that they can do it. And it's not that you can't do it, because anybody can do a Roth conversion. It doesn't make economic sense to convert and pay the taxes now versus later. And one of the things, it's truly a sweet spot that we have, is the fact that we can offset that taxable income. As you know, if you've listened to the show, Bison 2 is our energy fund. And last year, for every $100,000 invested, you're able to reduce your taxable active or passive income by almost $90,000. That is absolutely significant. Think about that. You don't need to use it for a Roth IRA. I mean, you just might have sold a building, sold a business, sold, some property. We're seeing a lot of people that have, significant capital gains, and with concentrated stock positions. When you look at NVIDIA and it's up, 1,500%, over the last 5 years, you have to really stop and think and ask yourself. And I know it's counterintuitive, I get it, but you have to stop and think. Ask yourself, do you think that stock is going to repeat that performance over the next 5 years? So most people are letting kind of the tax story make the decision, because they don't want to incur all those capital gains. And when you have the Roth conversion, obviously when you convert, it's taxable income in the year that you convert. Well, with the Bison 2 energy strategy, again, we're just simply investing alongside of the majors in the best oil field in the world in West Texas, the Permian Basin. So we're actually taking ownership interest in their deals. They are the ones that are doing the drilling. They are the ones that are paying us the revenue, the Exxon, Chevron, Conocos, Matadors, Occidentals of the world. And we just have a little piece. And our fund at $50 million will have, ownership interests in, 150 to 200 wells, hopefully north of 1,000 acres. And you're not going to find another advisor in the Chicago market, probably the Midwest, and only a very few advisors throughout the country that can bring you this type of a strategy. And we don't open this up. We haven't opened it up to other advisors and their clients. It's our fund, our advisory team, our team that we've built. It's been an evolution since 2017, but the tax benefits are staggering. And so we want to model out the Roth conversion. Most people don't recognize with the Roth conversions, if you don't spend every dollar that you have and you have heirs, they can let that grow for 10 years tax-free. 10 years for tax-free, and take all of that money out on the 10th year. And again, that's if you don't want to spend every penny. You may want to spend every penny, right? And so we have to model that out as well. But through our financial planning process, we're modeling out your tax life to age 95. We're using tax software. Now, we're not tax professionals. We can't give tax advice. But the Holista Planning software gives us a clear look through based upon your tax returns of exactly where we can save you money when it comes to taxes. And so I really want you to start to think, especially coming up onto the end of the year, if you've made, a good sum of money this year and you're accredited, you have to be accredited, $200,000, I think, of income single, $300,000 joint, or $1 million net worth, not including your primary residence, you're able to invest in this strategy. Not my rules, the rules of the SEC. So I want to make sure, and when we talk about growth, we're targeting a 2-to-1 growth. Think about that, 2-to-1. So you put in 100,000, you get your 100,000 back plus another 100 in 3 to 5 years at exit. Now it is illiquid until exit, but our exit is, we say up to 5 years, and the sweet spot really is between year 3 and 5. But we will definitely, let the market dictate, ultimately when we sell. So not only are you getting amazing tax benefits, but you're also getting, a very strong targeted return. Now we have to say target, because we don't know what's going to happen in the world, right? We can't predict anything, but we run all of our economics to hit that goal. And we're very, very confident that we will. So the banknotes are still pricing north of 12 for those investors. That's generally what piques most people's interest. Like I said, we've done $50 million to date, probably end up the year somewhere in the neighborhood of 75 to maybe 90 million of new issuance in the banknotes. Again, the banknotes are strategies that are offered by the largest banks in the world, the JP Morgan, Citigroup, Bank of America, Morgan Stanley's. Again, they're backing it. It's a prospectus item. If you read the prospectus, wholly guaranteed by the bank, not FDIC, but the bank. And these banks, I don't think that we have to worry about. So, in this market, if you're concerned that it's run, that we may see, a pullback, if you're in a bond strategy, which most lazy advisors still have investors in, and you haven't made any money, God forbid you're in an annuity that hasn't grown, which, probably 9 out of 10 are. We have answers. So 12%, 12.5%, whatever the note's pricing with 30% downside. So we'll get more into that and more into our hedge fund strategy after the break. 630-492-1912. 630-492-1912.
Planning for retirement is kind of like planning for the trip of a lifetime. First, you save and plan every detail. Then comes the day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-492-1912 and visit our website, KuhnCP.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn. I am the president and founder of Kuhn Capital Partners, independent SEC-registered fiduciary, headquartered in Oak Brook. We're right across from the mall, so if you know where the Fidelity office is in Oak Brook, they are on the first floor. We are on the 5th floor. It doesn't matter which way or what elevator you go into. All you're doing is turning left, and you're going to see our office. So we'd love to have people stop in. That's not something that I've usually have advertised, but I absolutely, positively love people that walk in and just say, hey, I've got questions. Let's chat. And as long as we're not in a meeting, myself or Brian or someone else from my team, we can certainly sit down and have some a conversation with you. So please just stop in. 1415 West 22nd Street, Suite 530. So if you know where the Fidelity building is in Oak Brook, right across from the mall, feel free to stop in, have some coffee. Now, I bought this fancy, we lease it, this fancy coffee machine. I'm embarrassed to tell you what it costs a month, okay? We love it, but we bought it for clients and we bought it for people that are interviewing us. So if you come to our office, please have some coffee. It makes 20 some odd different drinks. We would love for you to stop in and have a cup of coffee and look at and go down memory lane with all of our jerseys that we have hanging on the wall, signed jerseys. from the Bulls, Lot 85 Bears, Bulls, Cubs, Blackhawks, and a few others. So we'd love to let you just, take a look at those. And then, certainly, we could have a conversation about what you're doing. And, generally how we kind of, focus on things, everybody asks, very first question I ask people is, why are we here, right? And so we sat with a business owner this past week, sold his business for, a fairly good sum of money. Most people would think it's, they would consider that person rich. And he did very, very well and basically managed his money most of his life. And very first question I said is, why are we here? What are you hoping to accomplish that you can't do on your own? And that really gives me some insight into, what it is and why you think that you need to work with an advisor. Because I'll be honest with you, most advisors aren't worth their salt. Most advisors are going to put you in a market-based strategy. Again, it's going to sound really sexy. It's going to sound proprietary. It's going to sound cutting edge, and we're the only ones that do it, and this and that, and the whole song and dance. But all it does is track the market up and track the market down, track the market up and track the market down. And that's a pretty dangerous game to play when we're at these valuations and we have this level of geopolitical risk in the market. And so after we kind of, learn and hear, I'll go into kind of who we are and what we are and, why we are unapologetically different, and we will never disrespect other advisors because it's not professional. But I see far too many advisors that are doing nothing and collecting massive fees from these accounts. And we are setting out to change that. And I have good news for you. We are, when we look at kind of our growth as a firm, I mean, we're 10x, up 10x over the last 5 years. And, that's a growth rate that we want to continue. We kind of look at it as a startup in the finance space because our offering is so unique. It is so different. It is so tax, beneficial for investors. And we just have an offering that we have to get out. That's why we've gone into other markets. So we do, if you believe it, I do a whole nother radio show for other markets. And I love it. But we want to make sure that, if it's more of a southern Florida or northern Florida, the Panhandle, or Naples, that we're kind of telling that story that is going to attract, those types of investors. We want to make sure that, we're always providing value. But, when I look at people and I sit across from them at the table, I will tell them that we're all heroes when the markets do nothing but go up. Advisors love to pound their chest and talk about just how great they are. Yeah, our equity portfolios are up 40, 50%, 60%, 80%. I mean, they're killing it. But can you just, take a step back? Do you know how bad you would have to be not to make money in a market like we've experienced? My 13-year-old, which is my youngest, just turned 13 this year, just this month, actually, well, last month. She's a stock picker, and, it doesn't take a lot of skill. It doesn't take a lot of talent to make money when the markets are doing what the markets are doing. So what people are gravitating towards us for are the strategies that, what if the markets don't just continue to go vertical? What if we ultimately see a pullback? We will. I don't know when. I mean, maybe it won't be for 10 years. Who knows? But when you look at, strategies like the banknotes, it's one of the very first questions I ask a potential client that's interviewing us is again, every interaction we have with a potential investor, it's to educate you on how to make a good decision. It's to educate you on how to make a good decision on who you want to partner with to manage your money. And because not all advisors are created equal. 99% of advisors, in my opinion, it's just a closet index fund wrapped up into some, so-called proprietary this, proprietary that, but it just goes up and down with the market. And the number one question that I suggest that everybody ask your advisor, ask us, ask people that you're interviewing. I want to know what portion of my portfolio, if the markets go down, will still deliver a positive return. Think about that. What portion of my portfolio? I want to see it. I want you to show it to me. I want to see it on the screen. I want to see it on the statement. Don't give me double talk about bonds, because look at what bonds have done. Don't give me double talk about time in the market and, it's asset allocation. All of that stuff is true. Don't get me wrong. But I need you to show me what bucket of my money will do well if the markets don't do well. Now, our strategy are the bank notes, JP, Citi, Bank of America, Morgan Stanley, UBS, etc. And we have a 30% buffer. We have a 30% buffer before you don't get paid your monthly coupon. So we can look at a client and we can tell you if this note paid 12.5, if this note paid 13, if it paid 11.5, whatever that is, simply divide it by 12. And as long as the indexes are not down 30% each month on your valuation day, you will get paid. That is an incredibly strong portfolio. That is an incredibly, incredibly strong story. And, when you compare that with the tax strategy, in the energy strategy, there are two just, pillars right there that no advisors can match. None. And then you kind of go into the middle of what we're doing and kind of the middle, of our portfolio allocation. And we have our growth strategy. Our growth strategy is, third party, all individual stocks. We don't actually manage that. They're a top 5. Well, they're top ranked. And again, past performance isn't indicative of future results. I want to always make that clear. But when you look at what they've done, and they're big, $15, $20 billion, but they're quantitative. They were quantitative, which is just mathematical, is how they make decisions. Before, mathematical and quantitative was mainstream. Today, everybody's running an algorithm, right? Well, they've been running this since 95. They were Wall Street's research shop in the quant space, in the 80s. So their all cap and focused growth strategy is absolutely phenomenal. Averaged, again, backward looking, but since 95, a little over 12.5% net of fees. S&P around 10.5. It doesn't sound like a lot. 1.5 to 2% a year does not sound like a lot until you do it over 30 years, 35 years. So the cumulative outperformance is over 1,300% of the S&P 500 net of fees. Again, past performance is not indicative of future results. One of the reasons we think it's repeatable is, again, because of the quantitative mathematical nature of it. And don't believe me, you can go and look at where they rank versus all managers, all like managers, generally always in the top 5%. And it's consistency of those rankings is what we like. And so, yeah, there's massive outperformance. Then we got our aggressive growth strategy, our opportunistic strategy. It's our hedge fund, again, our fund that we set up. We took a lot of time thinking about this. And again, most advisors, you've heard me talk about this, and I say this so often I sometimes forget, but it's so important. My belief is that 99% of advisors do not invest their personal money the way that they advise clients to. And that's a shame. The way that they advise clients is just buy and hold. Don't worry about the market. Don't worry about losing it. You're going to be fine. Well, that's not how they're managing their money. I promise you that. You never hear, you hear it. You hear, don't get emotional about, losing money. But the people you hear that from are generally people that are managing other people's money. And so we created a hedge fund. You have to have a $2.1 million net worth, not including your house, or $1 million with us to qualify to invest in it. Again, not my rules, but the rules of the SEC. And it's an event-driven strategy. It's the strategy, we were talking how we invest differently. And we thought, well, for 10 to 15% of someone's money, how great would it be to allow them to invest in our strategies and our philosophy of how we look to allocate personal capital. It's event-driven strategy, and again, it can go long, short the market. It can, it's just there's so much opportunity, and you're in certain networks, and do not make any mistake. Investing is always who you know. Always who you know. And we know a lot of great people, a lot of great groups. So 630-492-1912, 630-492-1912. Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn, president and founder of Kuhn Capital Partners, SEC Registered Investment Advisory. And yes, we are a fiduciary headquartered in Oak Brook. If you know where the Fidelity Building is in Oak Brook, just off of 22nd Street. We are on the 5th floor. They are on the 1st floor. So come on up to the 5th floor. You don't need an appointment. If you'd love to just stop in, we'd love to see you. If you'd like to schedule an appointment, great. We can certainly do that as well. 630-492-1912. 630-492-1912. So the bank notes are still pricing, like I mentioned earlier, very, very strong, still north of 12%. So again, 12% with 30% downside. So the J.P. Morgan, Citi, Bank of America, Goldman Sachs, just all the big banks are offering the bank notes. Again, it's not a retail strategy, so you're not going to be able to go and just find it. You have to have an advisor that really specializes in it, and we are one of the few advisors in the Chicago market that does it at scale. Currently, year to date, $50 million in new issuance, probably end up $75 million by the end of the year, and we're hoping to do $100 to $125 million next year. And I understand why people want them. I mean, when you can tell a client, for this bucket of your money that you can get, 12.5% as long as the indexes don't drop 30%, and you get that paid in monthly cash flows, I mean, that's a pretty dang compelling story. So I will put that up against any bond strategy any day of the week. Look at what bonds have done over the last 5 years. I mean, almost nothing. And you're tying your money up for a 10-year bond. If you look at AGG, which is the bond proxy, the bond ETF, for under 2% for 10 years. And here's a strategy with the enhanced income yield notes that the banks are offering that is giving you historically equity, greater than equity-like returns with a 30% downside buffer. So, we'd love to chat with you about that. 630-492-1912, 630-492-1912. Also, Roth conversions. We're seeing larger and larger IRAs, $1 million, $3 million, $10 million dollar IRAs that are coming into the office and wanting to learn more about Roth conversions. Not because they don't know what they are. Conceptually, it's very easy. Anyone can do a Roth conversion. It's just as much as you convert, it's taxed. It's ordinary income in that year. So if you have $1 million IRA, you convert $1 million into from an IRA to a Roth. That's $1 million of additional taxable income. Well, if you invest in Bison 2 with some other money, that's our energy strategy, you're going to get significant tax benefits. Last year it was almost $90,000 per $100,000. Year before it was almost $83,000 per $100,000. The year before that, I believe it was over $90,000 per $100,000 invested. So think about that. If you're a high wage earner, we have to reduce your taxable income. Not only are we reducing your taxable income with a strategy that's been around in the tax code forever, it's not even gray. We're in a strategy that we're targeting a 2-to-1 growth rate. I mean, if we're going to inflate, the heck out of this market, you want to be in, hard assets. You want to be in, the commodity space. And when we can invest, directly alongside of, the Exxon, Chevrons, Conocos, Occidentals of the world in the best oil field in West Texas, the Permian Basin, best oil field in the world. And they're doing all the drilling. All we're doing is, we own, a very small piece of it, and a fund that owns, probably at 50 million, 200 plus interests and 200 plus wells, hopefully 1,000 plus acres with a 3 to 5 year exit when we go to sell. We're very, very confident that we're going to give you returns that may outperform the market. I don't know. So when you can combine tax benefits alongside of returns and then do raw conversions, or if you're a high wage earner and you want to reduce your taxable income, or if you sold a business, or if you sold a building, if you have, concentrated stock, we really need to talk. 630-492-1912, 630-492-1912. So between the banknotes and the energy strategy, just right there, two of our pillars, 2 out of the 4 pillars have the ability to make money even in a negative market. And that is why people are working with us. That is why they're reaching out to us, because we're not just selling an annuity. We're not just selling. I listened to a radio show. It was an ad, and I'm not even going to tell you the station it was on. It wasn't on this station. And I knew it was an annuity because anytime anybody starts talking about no losses, it's an annuity. And when they started talking about 7% growth, 10% growth, 30% bonus, they always add in for income. And what you don't realize, because you haven't used that strategy before, that's not real money. That is not real money in any way, shape, or form. That's an income base used to calculate future income. And the insurance companies know that you'll never run out of money. These lifetime income strategies, you are only taking your own money out until the account goes to zero. The insurance companies know that they're going to put a governor on the withdrawals so you don't run out of money and you get a certain amount of growth. And the worst thing about these strategies, the worst thing, and shame on the advisors on this station that are selling them this way, they're using illustrations of hypothetical data that the strategy did not exist. It did not exist. It was computer simulated. Have you ever seen bad data in the past? I mean, nobody's going to run a model that says, oh, yeah, this really stunk, so let's go and do it. Never. So it's so shocking to me when we meet with people that there's one in particular that's all he does, and he's very proud of it. And he's like a minor, what is it? The D League, minor leagues for us, because inevitably so many of his clients come to us because they were promised something that just was not delivered on. And you look at the hypothetical returns versus the actual returns, that's the beauty of it. If somebody's showing you an annuity, call us, 630-492-1912. We'll look at the illustration. We'll look at the hypothetical data, and then we'll look at the real data, because a lot of them are starting to have 1 to 2 to 3 to 4 years worth of real data, and the returns are awful, absolutely awful. And that's a problem. And you don't understand lifetime income, and you don't understand how that works, because you're only taking your own money out. That is all you're doing, is taking your own money out until the account goes to zero. But that income is never going up. And think about inflation. How do you look at the banknotes that are paying you today 11, 12, 13% with 30% downside, and they'll continue to pay you that every single year that we own it? So when we look at cash flow, and if you want cash flow, there is no better cash flow strategy than the banknotes. None. And we will, put the lifetime income annuity to shame. And far too many people are selling them. Far too many people are not being completely honest with them. And guess what? These advisors are making 8, 9, 10% commission. And if it didn't pay that commission, I bet you most people wouldn't sell them. So that's something that we're going to continue to hit hard, because I see too many people that need cash and they're relying upon 3%, 4%, 5%. That's never going up, and inflation's not going down. And that's just an issue. And I do not think people fully have been educated on them. So that's what we're doing. 630-492-1912, 492-1912, and we'd love to help you. Gold, I'm sure we got a lot of gold bugs listening. This is your year. This is absolutely your year. Gold is on pace for its best year since 1979, up 46% in 2025. I mean, that is absolutely crazy. Now, here's the problem. It's already up 46%. So, unfortunately, we see a lot of people chasing right now. And again, investing is always forward-looking. You have to look forward. Is it going to repeat? I don't know if it's going to repeat. It's had a decent, last handful of years. Now, gold over the extreme long run back out this year, it generally has been a pretty poor investment compared to the market, but it is doing very, very well this year. And, it's something that I just have to caution. Now's not the time to chase. Maybe it's time to chase for a little, but investing is always forward-looking, because when you look at kind of the market, and it's just staggering to me, the top 10 holdings in the S&P 500, they now make up nearly 39% of the index. That is the highest concentration on record. What does that mean? That means not a lot has to happen before, the markets stair-step up and they kind of elevate or down for that to happen. Now, I'm not calling for that. I personally believe that, again, doesn't matter. I think I told you in the first segment, it doesn't matter what I believe, or really candidly what you believe in the market. It's going to do what it's going to do. And, human nature, we want to always think the best. But I think the markets are stretched. And I think now, at least for us, we are overweighting strategies like the energy strategy to reduce taxable income and to still get, a targeted 2-to-1, return at exit. We're definitely overweighting the banknotes, at the enhanced income yield notes right now, because again, we've got 30% downside for us not to make, whatever the note is paying 11 or 12 or 13%. And so we're certainly doing that. And we're letting our equities ride. I mean, our equities have done, absolutely fantastic. But, we watch the charts religiously. And there's going to come a time where we have to play defense. And that's what separates the big boys, the pros, from your average investment advisor. Your average investment advisor is more concerned about his revenue than actually managing money in many instances. So that's what we're doing. 630-492-1912, 630-492-1912. We'd love to talk with you this week. Again, hopefully everybody's having a great start to fall, even though it feels like summer. More after the break.
Planning for retirement is kind of like planning for a trip of a lifetime. First you save and plan every detail. Then comes a day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-429-1912 and visit our website, kuhncp.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn, president and founder of Kuhn Capital Partners. We're independent. We are a registered, SEC-registered investment fiduciary and money manager, and we are headquartered in Oak Brook. So if you know where the Fidelity building is, off of 22nd Street, we are on the 5th floor. Just get off the elevator, turn left, stop by. We'd love to see you. No appointment needed. We've had people stopping in. I absolutely, positively love that. We are very passionate about our craft, and anytime we get to talk investing and strategies not to lose money and how to outperform the market, we just absolutely love to do that. So if you would like to schedule an appointment, you can easily do that as well, 630-492-1912, 630-492-1912. I made the decision this week to create a new webinar series, because a lot of what we talk about is actually relatively basic, very, very basic, to be honest. In my opinion, it's very basic. It is very high level. It is very institutional, and most advisors, certainly aren't doing the banknotes. I mean, how they could not be offering those is just, I just don't get it. In a market with these valuations, when you can go to a client and say, hey, it's backed by JP Morgan. We're going to get 12.5% a year paid monthly. So break that annual into monthly payments as long as, these indexes don't go down 30%. So another way to look at it is you have 30% downside to still make double digits. I don't know how people don't do that. I don't know how every advisor does not do that. We do. It's a lot of work, especially when you do the volume that we do. Like I mentioned, we're over $50 million in new issuance this year. Probably end up, 75 to 90, somewhere in that area by the end of the year, and hope to do over 100 million, next year. But it's so comforting for clients that want a hedge in place. Most advisors do not have a hedge. Most advisors, their only hedge to the down market is time. They have nothing in place that will actually make money. And it's unfortunate. It is absolutely positively unfortunate. But again, I'm glad that we do. But, so when we look at kind of our pillars of protected growth, opportunistic growth, and then obviously the tax reduction energy strategy, if you're a high wage earner, man, we can reduce your taxable income significantly. If you want to talk about Roth conversions, if you're an attorney, if you're a physician, if you sold a business, sold a building, have concentrated stock and you want to really reduce your taxable income and either just simply reduce your taxable income, or if you want to pair that with, doing Roth conversions while minimizing the additional taxable income, the single greatest tax benefits are in the energy space, really because it's active or passive income. So much better, in my opinion, than real estate, active or passive income. That is a big, big, big differentiator. And as a reminder, we're simply investing, alongside of the majors, the Exxon, Chevron, Conocos of the world in their projects. And so we're an owner. The fund's an owner, actually get paid revenue from those companies. And rather than, just trying to pick a handful of wells, this isn't speculation. This is institutional level transparency. Custodied at Charles Schwab, third-party accounting, third-party annual audits, third-party fund administrator, and each $50 million fund will probably have 200 plus wells, 50 to 75 permits, 1,000 plus acres, and we're looking and targeting a 2-to-1 at exit, and so that's what we're really looking to do. And so for those people that have significant concentration in kind of the Mag 7, and we meet them. I mean, heck, we met with a client that had a couple $1 million in NVIDIA, and I think it's over 6-7 now. That's a lot of money, and that's a lot of potential risk as well. And so, we have to at least hedge that. Absolutely, positively has to hedge it. But if you're looking to, because again, investing is forward-looking. It's always, always forward-looking. It's not, could gold go up 50% again next year? Yeah, probably, or probability, not very high. But what gets people to invest is to see these big run-ups. And, well, we probably should have invested in it when it didn't already do 50, 60, 70%. So investing is always forward-looking. And so I really want investors to think, if you have heavy concentration in the Mag 7 or the tech names that we all know, you might want to peel off some of those gains and invest it and consider our Bison Alpha strategy. It's a hedge fund. It's a hedge fund that is event-driven, that is really there to take advantage of dislocations in the marketplace, dislocations in certain stocks, and we believe that the event-driven space, when the event happens, it produces significant torque to the upside. And when you have 25 to 30 names that have the potential to really go up, and it doesn't matter, doesn't have to be a tech name, we could potentially give you significant outperformance. And that's kind of what our target is for those individuals that have, a lot of exposure to the tech names. Now may be the time to realize some of those gains, not all, but some of them, and put it in a strategy that can now go after, those types of gains, over the next year, 2, 3, or 4. Now, again, past performance is not indicative of future results. I mean, we can't promise anything, especially when it's equity related. But the strategy and who you know in the groups and the circles of other fund managers is a differentiator. It is always about who you know. The beautiful thing about being in this business for the time that we have been in, there are some fantastic groups that we're part of. The names would blow your mind. And we look at the world and challenge the thesis and all kind of vet, many of the same deals. And so if you want to learn more about Bison Alpha, our equity strategy, we'd love to share it with you. 630-492-1912, 630-492-1912. Requirements for that are 2.1 net worth, not including your house, or you have $1 million with us under management. And again, it's the SEC's requirements, not ours. So if you meet those criteria, then we really would encourage you to be open to, investing in a strategy in many of the same principles that we allocate personal capital or capital that we're managing for the fund. And so it's we love it, absolutely positively love it. And again, it's custodied at Schwab as well. So Schwab is our custodian for everything. They're our custodian for the energy fund. They're our custodian for the hedge fund. They're the custodian just for all of our clients. And that doesn't mean that Schwab says we're good or bad. I don't want, to leave you with that impression, but we certainly have met, the due diligence that they put, funds through, and it's pretty significant and takes some time. It really does. They dot every I and cross every T, and the annual audits of the funds, independent third-party audits, and having independent accounting and having third-party fund administrator, that goes a long way with these big custodians, because I would never invest in a private fund that did not have that transparency, that institutional level of transparency. It's, in my opinion, a must, really. So we have it. So 630-492-1912. So, again, talking about the webinar series, because when we meet, we kind of go over our pillars. And, the bank notes are very basic. Once you watch the video, once you watch the webinar, you realize just how basic it is. And now, again, it is very exclusive. It is very, very exclusive. It's a private bank, institutional type strategy that, I'd say better than 90% of advisors don't know very much about. They may convince you that they know a lot about it, but then you simply ask them, what's your new issuance? How much have you done for the year? And you want a number. I could show you our number. And if it's, a couple million, 3 million, 5 million, they don't really do them. It's not part of their business. When you're getting upwards of, 50 million and it's only October, like us, and we'll finish at, 75 million, probably, it's something you really know that we believe, in, and so we do it. And I understand why. So going back to the webinars, so we want to create 4 webinars that after we meet, that you can just go and watch at your leisure. And I pride myself on taking complex topics and breaking them down to, breaking them down in such a way that you can understand them. And that doesn't mean I'm smarter than you at all. I just have a 30-year head start on investing. And so we want you to, kind of, understand it so you can make a good decision for, you and your family. And that is, oftentimes is us. And we are very pleased to still do that and still had just really great year, actually. If we're looking at it, we've been able to help out, a significant amount of new clients, probably end the year at, $60 million in new client assets, which is, relatively significant, especially of a firm like our size. So it's it's a lot. And next year our goal is over 100 million, and we're staffed for it. And you'll never just be a number. So with that being said, I want to thank everybody for listening. Hopefully you got something out of this weekend show. Hopefully everybody is enjoying fall. But it feels like summer, especially this first weekend in October. So if we can help you, stop by again. We're in the Fidelity building where Fidelity is. We're on the 5th floor, Suite 530, Kuhn Capital Partners. Or give Paige a call, or Carrie, or whoever answers the phone, 630-492-1912, 630-492-1912. So until next week, have a great week.
This recording is for informational purposes only and should not be considered investment advice. Kuhn Capital Partners does not provide legal, accounting, or tax advice. Any statement regarding such matters is explanatory and may not be relied upon as definitive advice. Opinions expressed are current as of the date of this recording, and such opinions are subject to change. The views and opinions of guests on this program are not necessarily those of Kuhn Capital Partners. Any reference to guarantees, principal or income, protection, buffers, or defined outcome investments are generally structured notes or fixed insurance products backed by the claims-paying ability of the offering company and are not insured by any government agency. Kuhn Capital Partners is not affiliated with any guest unless otherwise stated and does not guarantee the accuracy or the completeness of any data presented. Kuhn Capital Partners and its affiliates are not responsible for any trading decisions, damages, or other losses resulting from or related to the information, data analysis, or opinions in this recording. Past performance is not a guarantee of future results. All investments are subject to investment risk, including but not limited to the potential loss of principal. Advisory services are offered through Kuhn Capital Partners, LLC, a registered investment advisor.